Hello traders and welcome to September Trade. Today is September 1st, Thursday. We're just a couple of seconds out from the weekly continuing jobs coming in, slightly weaker than expected, no major release there. Also looking at non-farm productivity, right in line with expectations. Unit labor costs coming in just higher. Not a major market read for today, guys. Obviously, everyone's looking at tomorrow's non-farm payroll print. But I just wanted to release those figures to you as soon as possible. The more important print for today will be the ISM manufacturing release. That's at 10 o'clock shortly after the conclusion of this webinar. So keep that in mind for any dollar crosses that you might be looking at heading into the U.S. Open. That's going to be the major event risk for today. Okay, so with that said, good morning to everyone here in the room. And again, welcome to September Trade. We're right on the onset of tomorrow's non-farm payroll report. We're heading into an extended long weekend here in the United States for Labor Day holiday on Monday. So market liquidity is an issue, okay? Expect thin trading conditions right into the close of the week. I can tell you just from firsthand here in New York, the downtown area is pretty much signed off for the rest of the week already. So what that means for us as near-term traders, we're going to be reducing our leverage size. We're going to be really selective with getting in and out of these positions. And again, just be nimble, okay, as we get up the start of September trade. Graham, welcome. Good to see you in the room here. Says, hi, Mike. Welcome to the new month. September was called, quote-unquote, harvest month in Charlemagne's calendar. Cheers on that. Adam, great to see you as well. Horace, Jim, Joel, Eileen, I will look forward to seeing you next week as well. Great to see you and happy September. Okay. So here's what we look like heading into the U.S. Open. We have a lot of pairs to cover today. Obviously, I'm going to go over all the levels for the setups that we covered in yesterday's intraday update, and then we're going to go straight into all the dollar crosses. Just want to give you a quick update on all the dollar crosses. They're not all on the menu for me. I'm not really a fan of the euro right now. I like euro Aussie. Sterling is obviously on the menu after last night's, or this morning's, I should say, really strong PMI numbers. We'll go over that. Aussie's on the menu, dollar CAD's on the menu. Kiwi, I just want to show you the levels, not really crazy about it right now. Dollar yen is just ripping face. And then some of the crosses. So if you do want to stay away from the dollar, sterling yen, we'll go over sterling CAD, sterling Aus, euro Aus, and then obviously crude and gold. We'll wrap it up with a quick outlook on that. So any other pairs that you guys want to cover, just wait towards the end once we get through this list, and we'll jump right into your questions. Conwall, great to see you in the room. Good morning. Okay, let's jump right in. So here's what the U.S. dollar looks like heading into the U.S. Open here in New York. Obviously, the British pound is the strongest performer on this session. We'll look at those PMI numbers in just a moment. Aussie's pretty much unchanged. Yen, biggest decliner on this session, down 0.39%. Dollar yen came right into the upper median line parallel, basically the median line for the longer term chart. I'll show you that in a moment. I got stopped out of a dollar yen short yesterday. I actually did have opportunity to close it out, but I just didn't do it. So it went right through the high. It was a quick, tight stop, and we're right back at a near-term resistance. As I said yesterday to you guys here in the room, on a breakout play like what we've been seeing on some of these yen crosses, true, we're coming into topside targets. It's not necessarily an advocate for shorting it. There was a really nice short trigger yesterday on building divergence. Didn't pan out. That's going to happen. But I want to just tell you guys, when we're counter trend trading like that, we're like quarter leverage, right? Because this is a breakout play. You're always going to be better off waiting for that pullback to get you a better entry. So we'll look at the yen crosses in a moment. Heading into the U.S. Open, here are the data prints. Again, just a quick preview. Obviously, we just got those jobs claims numbers. Here's ISM manufacturing, expecting to see a slight decrease to 52 from 52.6. ISM prices paid expected to downtick also from 55 to 54.8. Unless you see a big variance off of this expectation, I don't expect this to be a major market mover, although it does highlight the most significant event risk basically heading into tomorrow. As it stands right now, Fed fund futures haven't really budged. We've been tracking this all week long as well. The December FOMC policy meeting is still the most likely chance that we'll see the FOMC move to raise interest rates. Keep in mind, as I've been noting all week long, guys, September, there's a central bank rate decision from all the central banks. So it's going to be a pretty major event risk as far as it pertains to monetary policy moving forward. I see some new names in the room here. Again, one quick reminder as well as we go through all these charts, guys, if you see any charts that you want to keep for future reference, go ahead and click that camera button in the top right-hand corner of your screen. You'll take a screenshot so you can reference that later on. You can't do that on the archive, so if you do want to take advantage of that feature, go for it. Okay. So I'll come back to the UK crosses in just a moment. Just want to go over the dollar index here as we set up heading into NFP. So the levels haven't changed since Sunday. And if you guys go back to the radar charts from last week, here's what the dollar index looked like. And we were trading within this descending channel formation. This was key support. Bearish invalidation was the 100-day moving average along channel resistance. That gave out. You came right into the 50% retracement, former channel support, now resistance, and then right into that 618, and that's where we faltered. And in fact, if you look at this on a closed basis, we haven't closed above that 200-day moving average once. We literally came right into it and rebounded right off it. So for the dollar index, obviously the risk is that key resistance at 1214. That's the break that you need to close above to really validate a much stronger reversal in play here. We're opening up the new month. Keep in mind, last month we essentially just held the monthly opening range. Nothing really offered any guidance with regards to that. I'm very tempted to just drop this ML slope altogether and work with a more basic gradient off the lows like this. Let me change the color on that so you can see it. But I just don't want to do that just yet. You know, I've been looking at some different slopes that might be in play here for the dollar index. Might give us a little bit better of a grasp on things. But as it stands right now, I'm just going to focus on the fib levels that we've been following. Okay, so watch for a close above 12,014 to give us the validation for a topside pop. You'd need a break below 11,981 to really let this thing go for a little bit more of a correction play. Here's what it looks like on the near term. Before I do, actually, also note that the entire month of July trade was governed by 40 support, 60 resistance, and momentum. So we're pretty much flat as it pertains to sort of a broader momentum profile here for the dollar index. Here's what the 30-minute looks like, or I'm sorry, this is a 2-hour. I'll bring it to a 1 hour even. Not much. Pretty boring week. You're seeing some extreme plays with dollar yen, with sterling dollar, but it's kind of evening each other out. And here's what it looks like on the index from the start of the week. So you're not really getting much here. Again, I'm just showing you this, guys, to keep the levels in mind. As far as the individual plays, euro dollar, sterling dollar, dollar yen, Aussie dollar, the 4 components included in this index, they're all working on their own merits. And we're just going to go over that in a moment. But obviously, since that downside channel break last week, kind of fizzling out here on building divergence. So risk remains for a move lower. If it does crack back below the weekly open, 11,966. Tack on a quick retracement here. And just look to target, a basic 38.2, which comes in right in line with the Friday close. The 50 comes in line with last month's open. Now, I was actually having a discussion with Jamie about this. Someone sent an email. I'm not sure which one of you guys, if it's in the room. Do the monthly opens matter the next month? So heading into September trade, Mike, do I need to be looking at the August open? Does that matter anymore? And you know what? That's a good question. And I would say this. If those levels converge on levels that were already being already in focus, meaning that you have a 50% retracement here already, you have last week's swing high here already, sure, yeah, I'll put that range up into the monthly open from August just because it's already being highlighted by some key reference points in price. So it becomes a little bit less significant. Nonetheless, when it converges on major fibs, moving averages, trend lines, things of this nature, just adds further validation. Okay, so a quick discussion on that. I hope that clears it up for the person who wrote that email. Any questions on the dollar index? Again, for those of us trading stateside, we can't even use this index to actually trade, but it's a nice little gauge here for base dollar movements. Again, we'll want to take every trade on its own merits, so let's jump right in. Okay, yesterday's report. Here's And by the way, Aussie Kiwi is ridiculous as well. We'll take a look at that in just a second. Here's what last night's update looked like. I just wanted to highlight this Aussie CAD consolidation that we were watching for the last few weeks. It did see a nice move here in overnight trade. Okay, here's what the Aussie CAD looks like on the broader view. And we don't know, again, that this slope is necessarily in play, but you did see that 50 line more or less catch that swing low. You had a swing low there also in July that caught that trend line. You have the 200-day moving average. So you saw a little bit of a consolidation region here and a triangle formation or a wedge formation. Typically continuation patterns, but again, heading into a new month, you got some major event risk on tap. The game plan was basically to look for a breakout and a test of support. As I noted last night, a breach above this region, okay, would be needed to validate the breakout for Aussie CAD. And this is last month's open, same exact thing we just went over, the previous month's high, or the previous week's high, excuse me, and a basic 38.2 retracement of the decline off the highs that you made in August. So this is sort of the breakout zone. You're seeing us fail right here, right now. Now, if we come back into the U.S. trade session and we hold support at the former opening range high for the week, that would be a nice tell that you would be looking for a broader upside break here, targeting basically 99.40 and initially that trend line or 50 line for the broader descending formation. If we break back below this, wedge formation, wedge resistance, not really interested in doing anything. I'm going to sit on my hands. Again, key support and bullish invalidation is down here. If we clear basic wedge support, this is a long-term 38.2 retracement. This is a basic 50% retracement of just the near-term advance. A break below here, where the weekly open is as well, would certainly shift the focus, right back to the downside here in Aussie CAD. So that's all to say. I'm still flat on this thing. I'll be looking to see if the U.S. Open offers anything with a hold at support, maybe a long trigger from here against the Asia lows. But essentially, you need to get above this region to validate a little bit more of a concerted break here in Aussie CAD. Might not be primed just yet, but heading into the start of the month, certainly something to keep in mind. Keep in mind the RBA is on tap on the 6th, which is next week. Okay, that's basically on Tuesday night is when we have the RBA on tap. And as it stands right now, here's what the probabilities look for the RBA. Okay, interest rate expectations as far as the next cut don't really surmount until you get a little bit deeper into 2017. Specifically, March starts to show the first percentage above 50. So while we're not expecting anything at this latest or upcoming meeting, obviously the rhetoric and all that good stuff from Glenn Stevens will be in focus. Any questions on Aussie CAD? Okay, approaching the August open as resistance notes, that's covered. Okay, dollar yen. Oh, dollar yen. So this guy, I mean, it was a preemptive push for me, but here's what dollar yen looks like on the daily chart first. And just to show you a little bit of perspective of where we are, I know Jamie's working with slightly different slope here, but this is what we've been following here in the webinars for a couple of weeks now. You can see the median line catching the lows pretty nicely on a close basis, like a rock as far as the actual low that we made back here in July. A nice raised floor as we turned ahead of that sliding parallel. Here's where we are right now, guys, right along the median line. Okay, we're probing through the 50% retracement. It's backed closely at 104.47 by the 618. So you're coming at some near-term resistance targets, which is for me why I can't really advocate getting long from a near-term scalp bias right now. Last night I was only looking for a little bit of a bounce back off that resistance. Here's what it looked like on the 30-minute. So you can see we had a convergence here. Nice swing lows that you made back in June. Okay, 103.54. You also had a basic 50% retracement of the decline off of the July high, 103.54 as well. And here we are. That's where I took the short yesterday, just off that region. looking for a move into a basic 38.2, which aligned very well with basically the session lows that we made in Asia yesterday. So that fizzled out right around 103.60. Again, it broke, took me out of my stop, which was just above. And here we are looking for a break of that longer term median line. So if that continues to go, guys, there's nowhere to put a responsible stop. So don't chase this. You're heading into thin liquidity conditions into the end of the month. If you're holding yen short exposure, honestly, I would have a stop at break even below last night's low. I'd be looking for a move into 104.47. Now, 104 could offer a little bit of a near-term pivot. Look at price here to the left. You've seen some really nice pivots off that level, so keep that in mind. But essentially, the next major key fib level doesn't come until 104.47 here for dollar yen. All right, look, bearish or bullish invalidation. It's a far away from where we are right now, but it still has to stay down here with the weekly open at 102.46, both from a slope perspective and just from a price perspective. So it's hard for me to advocate getting long here, even on a scalp basis, although I still do like this thing higher while above that 102 figure. Any questions on dollar yen? And the BOJ is not on tap until later in September. It's September 21st is when that central bank hits this month. So for dollar yen, I just also want to note that you're heading into NFPs, which is typically a really strong reactor for dollar yen. We need to remove this fib, by the way. You see a lot of dollar yen volatility on these U.S. data prints. So definitely something to keep in mind tomorrow. I wouldn't have a play for you unless the release triggers a drop into 102. That might be a decent opportunity to get back in against the weekly low. But on a topside stretch, trying to fade this move, just be cautious. It's going to be a real wicked ride tomorrow if NFPs really come off expectations. All right. Any questions on dollar yen? Okay. Moving right along. The last update from last night was Aussie Kiwi, and this thing, it's a slow burning trade, but the levels continue to really impress. Here's what Aussie Kiwi looks like on the daily chart. Here's what Aussie Kiwi looked like on the radar chart, which has been on the intraday page for the last couple of weeks. So the major break that we were talking about, or the dip that we were talking about, was this move here. Okay, 104, you had the 100% extension from the decline off those July highs. You had that long-standing slope of influence that we've continued to follow for since 2014. And if you take that same slope and extend it to the low you made in July, it converged right on that same 764 retracement. So that was the targeted drop here, 103.52, okay, 103.12 into 103.53. There's still room for a possible move lower here. I don't want to necessarily start advocating longs, but the near-term structure also has a very nice descending channel, which should give us a very clear indication when it breaks higher. So here's obviously the daily chart. We came right into that region yesterday. We found some support, rallied up. There's a near-term, like I said, channel I show you in a moment. And as we noted in the report, basically you're looking for some signs of a turn. Okay, you're looking for weakness in momentum. You're looking for divergence. You need to get a break above the weekly open and basic trendline resistance off those highs to really validate a reversal. But even near term, the trade was there to kind of get a little bit of a long position here on Aussie Kiwi last night. Here's what the scalp update looked like right off that region. This was the 120 minute. And here was the hourly chart. Okay, so we actually did come off that 764 for a nice rally right into 104. I mean, it was textbook. And then we came right back off, momentum holding 40 support. This is your initial resistance. On a break and a pullback, I would be interested in getting long, targeting the weekly open at 104.45. Keeping in mind all the while, guys, 103.53, 103.12, if those levels give out, sayonara. I mean, there's nothing There's nothing for a while down if that downside level breaks. Okay, you're basically just following slope because you're at fresh extreme lows. So you never want to be the one trying to call the low. It's a fool's errand. I tell you guys that all the time. But at the same time, if this thing is going to turn, this is a good spot for it to start to look for some support. Again, personally, I haven't taken anything on this just yet. I want to see this thing at least break channel resistance here to give us a little bit more of a near-term upside bias. Any questions on Aussie Key? Also, one thing I noted in last night's update, I just want to keep in mind, I have in my notes here, the range has been insanely tight here. And typically when ATR, when the ranges start to contract, guys, obviously price action is boring near term, but really strong contractions in volatility are typically preceding or precede huge spurts or bursts in volatility. So if you bring up a basic ATR indicator here, for example, just a basic average true range, you could see this thing is like virtually falling off a cliff. This is the lowest ATR reading that we've seen for Aussie Kiwi since way back here. Okay? And you see that those are ATR reads that preceded major bursts in price. Huge upside moves, huge reversals. When you're coming off these really contracted periods of volatility, you see those consolidation patterns, those sort of tight ranges break out into real strong moves in directional trend. So keep that in mind here for Aussie Kiwi as we head into the start of September trade. Excuse me. Even though 2-hour in middle of the channel, what is consideration because of daily support in Aussie Kiwi? I see what you're saying. So you're saying what is the consideration? Okay, good question. Let me go back to that 2-hour chart, get rid of this. So I guess Eileen's asking, well, this is right in the middle of the channel, right? You're not near support. So what's the consideration considering that we're coming up on, you know, basic major longer term support? Eileen, this is always going to be paramount. And this is why I always say the daily chart is that roadmap, the interstate highway map across the United States. So this, or across whatever country, this is, you know, major support that I'm looking at. Also keep in mind the low day close comes in just lower. So this is what's giving us guidance to give us a suggestion that, all right, it's an area we might start to look for some support. Eileen, don't get me wrong. I don't put this past this thing to break lower. Check the actual concerted swing low from July here at 103.12, then rip face. I don't know. All I know is that there's a setup, and the setup is you're coming into longer-term structural support. You're holding a near-term descending formation, so it only makes sense when that near-term descending formation breaks higher, it'll confirm the rebound off of long-term reversal or long-term structural support. Eileen, does that make sense? This is the way you want to play these reversals, guys, especially when you come into longer-term support. You want to see a descending or a near-term descending formation because that break is what's going to give you the validation, give you the confidence that, okay, we bottomed near-term. Great. So until we do, okay, until we do, this is still in a descending downtrend near-term, 100%. But you know the triggers and you know the marks that we'll be looking for to give us that validation for the turn. Right. Not yet. There's no turn yet. All right. So any questions on Aussie Key? Levels are really clean here, by the way, on the near term. This is just a basic quick retracement. That 100% extension we were looking at in the daily chart actually converges really nicely with the basic near-term channel resistance here, and that'll be the first break to let this thing go. That being said, you know, you're still in that descending channel. All right, and that is Aussie Key. So those are the updates from last night's report. Tonight's post will have all the dollar pairs that we're going to cover here today, but let's jump right through and knock these out one by one. Euro, pound, Aussie, CAD, and Kiwi. Here's what euro dollar looks like. My least favorite of the bit heading into tomorrow, just because weekly price action It's been absolutely ugly. This is just horrendous. I don't even know what to do with that. You know, the downside break that you saw on Friday of that multi-month ascending formation looked beautiful. The level that you reversed at was magnificent. The start of the week didn't really give you much of an opening range. It looked like it broke here on the 30th. We checked that as resistance. We talked about yesterday being the monthly close. Didn't really want to do anything. Range is contracted, and you're still just straddling this near-term Fibonacci level range between 111.39 and 111.45, a 1618 off the high and a 50% off the low. So I guess for euro dollar, what I just want to say is look at the daily chart. I mean, the 200-day moving average, is just lower. If we break below here, I guess an area of interest for long exposure for me is like down in this zone. Okay. You have a couple of different things to look at there. You have that low close from the Brexit session. You have some reversal day closes. And then you have obviously just basic trendline support off the lows. So an area of interest for me, if it drops down there to get some long exposure. As far as trying to play the short on euro, you know, if NFPs come out real strong tomorrow, guys, and this thing just plummets lower, again, it's going to be a chase trade. I'd have to see a rally more towards 1230, and I think that would be an area, or even the weekly open, I'd start to look for some short triggers and momentum, maybe an opportunity to get back on the short side. But from here, there's not really much of a play for me. And I've been trying to look for some structure on this decline, but it hasn't really offered anything clear, you know, as of yet. I was working with something maybe like this, where you have this near-term formation. It looks like it made a pivot, support, resistance, resistance. Even the 50 line may have caught that low. Long story, it's way too early to really depend on that slope, but that would give us room for a lot more of a stern decline towards that 50 line there. So we'll see. Not going to work with that just yet. But those are the euro dollar levels objectively I'd be looking at heading into tomorrow. More importantly, if you do want to play the euro, Euro Aussie is what I would be looking at as something of interest. Remember this setup, guys? This is something that we highlighted again on the intraday charts earlier this week. Euro Aus, here it is. So that same channel is in play. Nothing's changed. In fact, yesterday during the webinar, as this thing was coming to challenge resistance, there was a beautiful opportunity. The only trade I did take yesterday was a short on this. Closed it out way too early, but it did offer a little bit of a rebound right off that region. You're basically looking for this channel, for this flag, if it is a bull flag, to break, to give us conviction on a near-term approach higher. Now, for me, the initial target on a break above the weekly highs would be right here at the 2016 open. Okay, you kind of came right into that earlier in the month. I guess, well, this was last month now, August, before he turned off sharply. So that's your risk. Once you clear that, I think Euro Aus has room to explode. Here's what the daily chart looks like. Remember all the metrics we looked at with this trade heading into the start of August trade. Here's your marker for the August open. Not sure why it's not there. Okay. We marked some insanely strong divergence into those lows. Price action made a much steeper low. The oscillator made a much higher low, one of which was below 30, one of which was above 30, typically a strong signal. And then the rebound you saw after a quick consolidation below this multi-year, I guess at that point, trendline support shifted the focus higher. Now, we never broke last month's opening range high, and that's why it adds further validation to 104.14, okay, which is the yearly open. So if we get through that region, you got a soft target here at the 100-day moving average. It's 149.60. You got a huge confluence here, the 200-day moving average, the 50% retracement, Depending on where we are in time, you also have the 50 line, which caught the highs perfectly. That all converges at 150.63. So your bullish invalidation level is last month's open. Why does that matter still? Well, very simple. Still converges right on the 50 line. So I'm still going to keep that as my near-term bullish invalidation level. So with that in mind, okay, those key levels in mind on the daily chart, and keeping in mind that we're still broadly just in this huge, large consolidation. This is the daily chart, right? Well, this is an objective range break here if we clear this level. It's further highlighted by this near-term channel. So a topside break right here would validate a move above. You'd look for the yearly open to clear out. And again, those subsequent topside objectives would be a pretty quick play in my personal opinion if we do get that break. Also keep in mind, again, a pair where the ATR, the range has been contracting, typically, again, to precede a big move. Momentum over the last week has really been perfectly 60 resistance, 40 support, ping pong. That's a flat momentum profile, and that's what we're seeing in near-term price. So these, setups sometimes can be the most fruitful, especially as you head into the open of a new month. So keep that in mind here for Euro Oz. If you want to trade the Euro, this is my preferred Euro trade. Any questions on Euro Oz? And again, bullish invalidation. All right, moving right along. Let's jump into British pound. Good old sterling. Well, here's what the data look like. And I wouldn't think necessarily that it would cause quite that stir, but let me show you why. You got market UK PMI manufacturing numbers this morning. They came in at 53.3, which far surpassed the 49.0 expectation. And on top of that, just to sugar it up a little bit, you even got an upward revision to the previous month from 48.2 to 48.3. Now remember, when we're looking at PMI numbers, sub 50 means contraction. Above 50 means expansion. So we were still looking for a slower degree of contraction, but contraction nonetheless. This thing came in at 53.3, which means not only is the UK manufacturing market not contracting, it's expanding. And that was sort of the upset figure that really fueled some of the sterling strength that you saw earlier this morning. If we take a quick look back, guys, at historical prices here for market PMI numbers, here's the last time you saw a market PMI come in at a 53 figure. Was back in October of 2015. Look where price on the British pound was back in October of 2015. Obviously, Brexit's going to put things in view, but just to put things in perspective here. We were trading somewhere around 154, 153 and change. So keep that in mind. Pretty strong number. From a price action standpoint, this thing's ripping right into near-term resistance again. Here's what it looks like on the daily chart. We've been following these slopes just off of the post-Brexit highs that caught last month's high. A nice parallel of that same exact slope basically caught the high that we made earlier this month. I guess I keep saying this month as if it's still August. Last week. And here we are again. Convergence of that slope and a basic 618 retracement, or a basic 618 extension, excuse me, of the advance off the lows. So I'm going to put this in a little bit more of a concrete color now that we know that that is a concerted low. The 100%, so two equal legs off, comes in line with that post-Brexit high. So the levels are super clean here on the longer term. It's just that no one's believing this sterling strength, which is why we've been favoring sterling strength this entire week. And it's nice to see this finally pan out. I know swing trades jumped out of that pound yen trade. We were laughing about that this morning, me and Jamie. They're still going to think, I think there's still plenty of opportunity on that side. So to take a quick peek over at sterling yen in a moment, here's what the pound yen looks, or the pound dollar looks like on the daily, on the intraday chart. So here's what we presented earlier in the week. That brings us to a 1 hour, give you a little bit more intraday price action. So this break constitutes a break of the objective weekly opening range high. So we should be looking for a late week high. Well, it's Thursday, and you're coming into those near-term structural resistance that we just talked about. So again, I wouldn't be necessarily looking for fresh long exposure. A pullback towards 31.90, in my humble opinion, would be an ideal entry to try to get back on the long side. Just know that the resistance targets are really stacked up here until you clear 34, basically. You have 32.88. Like I said, that 618 extension. A 100% of just near-term price action off the low gives you 133.40. And then a 786 longer term comes in at 133.80. What would shift the focus back to the downside in the British pound? Very simple. A break below the weekly open, which now converges dead on with the monthly open. Okay, 131.37, 131.35. Any questions on pound dollar? Okay. Moving right along, pound yen. Let me just touch on that real quick. So here's the levels, again, that we've been tracking all week long, holding within the confines of this ascending channel formation. You saw that break above 134.50 really start to clear the way for the subsequent topside targets. Remember, the monthly open got taken out. The 618, or the 50% retracement, was that last target we fizzled out just ahead of. Here's the break, and here's the broader, longer-term 618 at 137.82. We're about to check that right now. Here's pound yen on the daily. Look at that breakaway. That breakaway gap that we just made. Okay, so here's a 618 retracement. Watch for some near-term resistance there. A pullback. If we clear today's lows, you have to let room for a fill of that gap, which would actually coincide with trendline support. So I'm a little scared to try to get anything on the long side here. Same deal. If we break above this, look to buy the pullback towards 140 and more key resistance way up here. But near term, I want to stay constructive above yesterday's close. And that means basically, let me take that back, right here. And copy that to the 30-minute, and that coincides right on with what I'm trying to show you. This is what I was trying to show you. Right on with channel support. That makes sense? So your ideal entry, don't think you necessarily get there, especially on these breakaway trades, guys. When you see, and we talk about this all the time, what do I always say? When we see an upside channel break to the top side, that'll be typically the strongest part of the rally. When we see a descending channel break lower, that'll sometimes be the sternest drop in the trend. So, I don't necessarily think we'll get that drawback all the way to 134.50. That being said, the initial area of interest I'd even start to look for re-entry would somewhere be near 36.15 here. Would be ideal for me. Questions on, let me just redo this real quick. And there's the amended chart. Questions on pound yen. Now, while we're on the pound, I just want to go across all the pound crosses. Obviously, we just talked about how strong those PMI figures are. One thing we also do want to keep in mind is the BOE is on tap next week, or excuse me, next month. It'll be on the 15th, which will be not next week, but the following week. Fed fund or overnight swaps at this point for the UK aren't really going to be showing much, I would expect. Yeah, not much of a probability for a cut or a hike or anything heading deep into 2017. So from the BOE's part, it's going to really be all about the forward guidance and the monetary policy outlook. So keep that in mind for British pound. But now that we're on the pound, I also want to just touch base real quick on pound CAD. This is something that we wrote about earlier last month. That's coming into near-term resistance as we speak. So if you guys remember this ascending channel, if you take, or I guess just basic channel resistance extending off last week's high, converges pretty nicely here with a long-standing 618 retracement. Here's what the daily chart looks like. And this is a retracement from the low that you made in 2013, specifically in March, the subsequent high that you made last year. Okay, the 618 retracement, you saw that break. We tried to break through it earlier, failed. It comes right in line right now with the high day close for the month. And the high day close post, essentially, your Brexit high. So what does that mean for near-term price action in pound CAD? Well, immediate risk is for a pullback right off this region, but I still would be looking to get constructive on a topside break above here. You're looking all the way up at 76.20. A lot of room. Big ATR trade. And again, this is just a basic play. You're looking to buy a pullback here. So how shallow the pullback may be, that's the issue for me. Again, ideally, from a swing standpoint, that would be great. Don't think you'll get that deep. But the trick here would be to do this. Wait till we crest, make a turn near term. If this ends up being a high, and I did this earlier this morning, that's why I'm just sharing it with you. If this ends up being the high, a basic 236, comes in right here. You see that? Near term, deeper in the month, boom, or deeper in the week here. So areas of interest. That was last month's open. That's the weekly open. There's areas of interest here for a pullback to get long on a breakout approach. 76.20. Brexit closes at 77.32. All right. Questions on pound CAD. Bank of Canada is on tap next week on the 7th. So right into midweek there on Wednesday, we get the release of Bank of Canada. Obviously no shift is necessarily expected from their end either. Last but not least of all the pound crosses is pound Oz. Here's what that looks like. Same type of deal. Topside break. The least favorite of the three, but I just wanted to show you the chart. Again, building divergence into that low that we made this month. We've made quite a stretch to the upside. This would be the first break of the basic objective monthly opening range high from last month. So full round trip. We basically closed the month essentially unchanged, slightly higher after this dip into fresh record lows or multi-year lows, shouldn't say record lows. And this would be the first objective break to the upside as momentum clears 60 on divergence. From a broader term momentum profile, this does look like a turn in price. So again, I'd like to stay constructive right above that same region, okay? And a basic 38.2 of the entire decline from the highs that we made back in March still takes you all the way up into 81.76. So there is room here. First initial target, look for last month's high at 77.87. All right, buy pullbacks while above 74 essentially here in pound Oz would be the strategy. Okay, I'm making good time here. I'm trying. So pound crosses are crossed out. Let's jump into Aussie dollar, dollar CAD, and Kiwi dollar. All right, Good old Oz. So she's stalling out a little bit here at that median line, at that sliding parallel that we talked about in yesterday's webinar. You saw today we rallied into that 75.50 level again. Here's the pullback once more. Here's the 30-minute looks like. And really, I have this as an expanding, range. I know Jamie's looking at it as if it's a descending channel. Either way you stash this, guys. The lower parallel remains the same and really highlights key support a little bit lower from where we are right now in the near-term approach. And I'd be looking for a risk on a drop into here to actually get long. I think this thing's going to kind of stay range-bound for a while. And I do want to look for a drop into this region for possible long exposure just towards the 50 line, the upper parallel. The broader bearish invalidation in my mind is still 75.90. Even though the upper basic trendline resistance is up there, A, that's a real swing high and an event risk, so I don't really want to stress it. And B, you have the monthly open, last week's opening range low, a 38.2. There's a lot there. So if you do clear that and the weekly opening range, I do think you have room to the upside for a stronger play. For my part, again, not really going to be looking to chase the short per se in Aussie dollar. It's been on a little bit of a drag here. You got a nice trigger and momentum just recently, but it hasn't really been able to follow through past essentially, what is that? This is the new monthly open right here where we just opened the session yesterday. So look for a move lower to get long, a break above, again, session highs. We'd basically be looking for the weekly opening range high and 75.90. I was having some issues accessing this morning. Would you do a quick review of sterling dollar, please, Ruth? I know you've already covered it. Absolutely. Here's what it looks like for you real quick. Of just the pound dollar, so you're coming into major resistance near term. The same slopes that we were looking at. You see that slope? See that slope? We're right there again. Okay, I like the upside. Like I was telling the guys, I don't think it's going to necessarily get the pullback all the way back to 31.90, but that would be an area of interest for me to start looking for another play to the upside. If we clear this, the top side, targets are pretty stacked up. So just keep in mind 32.88, that upper parallel. Look on the daily chart. 33.40 would complete a basic 100% off the low, really near term. So I wouldn't stress that. And then 33.80 would be a 764 and very close to the highs that we made for July trade, or August trade, excuse me. So I would remain constructive basically above 31. All right, Ruth, hope that helps. Quick review on sterling. Where were we? Aussie dollar. Any questions on Aussie before we move off? Dollar CAD. Here's what the loonie looks like. So the daily chart had us break above that highlighted region that we talked about yesterday. 618 retracement, a decline off the high. The 50 line of that current operative slope, 103.60. We broke above that, almost checked it as support. You didn't really get a chance to come back and test that 67 level of support. And then you continue to move higher. Nothing's changed on this from yesterday's webinar, guys. The same exact key resistance level is still what I'd be stressing, and that's this region right here. Nice confluence Fibonacci level of 786 retracement off the high and a basic 1618 off the low gives you 3150 to 3156. It's backed closely by the July high day close at 3186, and that's sort of the levels of interest I'd be looking at heading into the close of the week here for the loonie. A Bank of Canada rate decision, like I said, is on the 7th of next week, so something we'll be watching very closely into the open of September trade. Let me take a quick zoom out here, show you a little bit more perspective on where you are in the move. So Near-term resistance targets on a pullback or a dollar sell-off. You want to stay constructive while above the 50 line, which converges dead on with that former trend line resistance. Really nice levels here. And again, that 618 where we were trying to get long off of yesterday didn't really give us the pullback. This would be an area of interest for me. Key support for the near-term approach here on dollar CAD. Any questions on dollar CAD? So if you guys notice, the dollar crosses are sort of doing their own thing. So which is why the dollar index that we talked about early in the session isn't really like the super cleanest move heading into NFPs. It's going to be a really interesting print tomorrow, to say the least, with the market conditions as they are and with price action. Seemingly each dollar pair kind of just doing their own thing. It was, again, a discussion I was having with some of the guys here in the room. I really don't have a strong dollar consensus view heading into this release. Look, markets have been expecting a December rate hike. That's pretty much what's solidified in Fed fund futures and in overnight swaps. You know, the employment figures have already, I would think everyone would agree, the employment figures have already been pretty all right, pretty stellar. If there's been any revisions, okay, we're looking for 180,000. This is off of the previous print of 255. Unemployment's expected to downtick to 4.8%. Again, the caveat always, we'll be looking for the labor force participation rate to increase or hold to take any consideration with the unemployment rate. Because again, when labor force participation decreases, it tends to put downward artificial pressure on unemployment because the labor pool contracts. So that's all to say, guys. I mean, if this comes in line with expectations, I don't really know what the dollar would do. I don't really think the dollar is just going to rip. I mean, the Fed has already come out and said multiple times that employment, and even in this last round of rhetoric batch, some of them saying that employment and inflation, remember what Yellen said last week at Jackson Hole, are approaching the Fed's longer-term objective goals. So it becomes very hard for them to continue to justify this ZIRP policy, zero interest rate policy, and unless you get like a blowout read where it really ties their hands behind their backs, you know, I don't necessarily think that the dollar will continue just to rip higher on this. So we'll have to see what the consensus holds. My guess, and again, this is just sort of having been through so many NFPs, with where the dollar is trading right now, if you get a knee-jerk reaction, if the level comes in, if the print comes in essentially at expectation, and you get like a knee-jerk reaction higher, you want to fade that move. You want to fade that move, especially if it's like back into the most recent highs, or even if it stretches into the 786. It might be an opportunity to get, you know, to get a nice high there for a move lower in dollar CAD. Please remember commodities. Conwall, I would not forget commodities for you, my man. It says crude and gold. Still holding the crude short position with the break, with the stop at break even. Thank you. Yeah, you're more than welcome. We discussed that yesterday, right? I'm glad you held that. I was thinking about you when I saw that break, man. So like I said, I wouldn't necessarily stress that 44 level we're testing right now. The 618 comes in just below the 50 line. So keep this range in focus near term, Conwall. 42.90 into, I want to say like 43.30, an area of interest, basically right here. Okay, you have the swing highs from the opening range of last month. You have the 618 key retracement of last month's range. And again, the 50 line, which has governed crude prices for well over a year now. So I like it. Even on that near term, remember that slope we watched, we added yesterday, Conwall? Still in play, baby. That thing is looking real strong, real nice. Okay, so here's near-term slope support. Again, your stop's at break even, so I wouldn't even worry about it, but you're likely to see some upside or maybe a bounce here, maybe as high as even 45. I wouldn't stress that high we talked about yesterday. Now I would stress the session high. It brings it down a little bit. So this region here. Again, as we talked about earlier in the session, a downside break of a descending slope, if it does materialize, you're likely to see this thing just shoot lower. So, you know, I wouldn't want you to get out of this too prematurely. Momentum, even on the 4-hour chart is an oversold condition still. And you might see some divergence here. So don't be too surprised, Conwall, if you see a little bit of a rebound, man, heading into the U.S. session. Excuse me. I'd want to stay bearish below 45, and I'd be targeting next downside target near 43, basically 42.90. Good job on that hold. Well done. Does that make sense, Conwall? Any other questions here on crude before I move? Actually, one other thing that's just kind of popping at me, now that we've made a break of that low that we were looking at yesterday, I do want to just take a consideration and see what this extension looks like off the high. All right. It's worth leaving on here for now. I don't want to stress it too much. We'll just leave it like this. And this will be this will essentially be your bearish invalidation level heading into the start of next week. If you clear like 46 essentially, which is a really nice pivot in price. That was the 100% off the high. It would be the upper median line parallel. But levels look good. Levels look good. He says, no, thank you. Appreciate that. All right, and gold. Last but not least, we can't forget about gold heading into tomorrow. Here's what gold prices look like. So it came into the first target, remember 1303, which is the May high. You're seeing a little bit of a sort of stall there near term as momentum starts to flatten out. I think this is going to be a strong performer tomorrow. Not in directional value, guys, but basically a strong volatile trade tomorrow based on what the dollar is going to do, because this thing just made a break. Like I said, the low day close from last month is still going to be the level of resistance I'll use as my near-term bearish invalidation level. So as long as we stay below 1330, I'm still looking for a stretch lower. Ultimately, guys, like I said, 1287, 1290 be a beautiful area. If we do get a dip into that, I think would be a nice entry for a long trade. There's just a lot there. You got the 50% off the lows from May. You got basic trendline resistance or channel, basic trendline support or channel support off of the low from last year. The 50 line for the current operative slope. I mean, it's all stacked up. So if you get, again, a scenario where NFPs come out, you get a strong dollar, which suddenly pushes gold into this region, might be a nice fade opportunity to the upside for gold. Likewise, a fade to the downside for the dollar. Also here, along the same lines, I just want to take a quick gander at what this looks like. I might have done this earlier. Look at that. Okay, worth drawing for sure. Okay, so the one, the 100% extension comes right in line with that swing high from May, which was the May high for that matter. So again, you could see a little bit of a bounce here heading into the U.S. session today before tomorrow's NFP, but largely speaking, looking for a possible dip here near 1287, 1290 region for gold. If you break 1330, I don't want to be in it. Okay, I want to be on the sidelines, Conwall, because then you risk a move towards the upper parallel, and 1355 would be sort of the onset, I think, of the breakout trade. Keep in mind, guys, this is coming off of that all-time record high trendline resistance. Let me bring this into a weekly chart. Okay, basic trendline resistance off the record highs. So if this thing breaks back above, that region, basically, like I said, 1330, you'd risk a move right through that. And if it does, then you're looking continuation. Then you're looking like 1380, you're looking at like 1417. And I do think, you do eventually get up there. But right now, the immediate risk still remains weighted to the downside sub 1330. Does that make sense, Conwall? All right. So if I go long around 1287, where to place stops? So that's going to be the trick. The long against 1287, and again, you know me, I'm trading on near-term Conwall. So again, remember yesterday's webinar, we talked about, um, trading the turn. If it spikes into that low and I jump into a short, or I jump into a long rather, the stop will be just below that swing, that spike. If you're scalping it. If you're looking to take a longer term approach, which it seems to me that you've been trading this a little bit on a longer term play, I would wait for the rebound to materialize, a pullback to test again, and then take a stop against the low. It depends how you're looking to trade this. From a scalping perspective, you kind of just need to wait for the dip right into that region, try to get in on a pullback with a stop against the actual spike low. But if you're looking to take a little bit more of a concrete approach, I would look for more evidence that the turn is taking place. Okay, a retest of that support, some divergence on that retest, and an upside trigger. All right. So guys, if there are no other questions, I'm going to wrap it up there. Remind everyone that Jamie will be on tap at 1 o'clock today. He's got a whole plethora of things to talk about, guys. He's going to go into depth today. I don't know if you read yesterday's report, but a lot of really interesting stuff on dollar rand, dollar ZAR. Also, he's going to go over a nice little session on trend line analysis. I think all of you guys should definitely attend, where he's going to go over how we look at trend lines. And we've been getting a lot of questions, and some of the topics that we've been discussing in the webinars are based on your feedback, guys, on stuff you want to talk about, questions you have. So definitely don't miss that. 1 o'clock Eastern today. Jamie will be on the mic. Until then, quick reminder, there won't be a webinar on Monday or Tuesday of next week in light of the holidays. I'll be back on Wednesday morning here with the Intraday Strategy webinar. We will have an update, obviously, Tuesday night for the intraday trades heading into the start of a nice of the month. That's all I have. See you guys next week. Have a great weekend. I'll give you an update today on all the dollar crosses ahead of tomorrow's NFPs, and good luck. Cheers.